You found the perfect Pittsburgh home. The price fits, the neighborhood feels right, you run the mortgage numbers and everything looks good. And then, on closing day, suddenly there are thousands of dollars on the table that nobody ever mentioned. That moment is one of the most stressful things a buyer can go through. And here's the thing, it doesn't have to happen that way. In my experience, this is one of the biggest eye-opening moments for buyers, and the goal is simple. When you get to closing day, it should feel exciting and smooth, not full of surprises. That's exactly why I always have this conversation up front with my clients. Today, I'm going to walk you through every hidden cost that catches Pittsburgh buyers off guard in 2026, so you can show up to closing day ready, not shocked. Most buyers focus on the down payment. That's the number that they save for, the number that they talk about. But what sits underneath the down payment is what actually surprises people. And in Pittsburgh, it can be a lot. I have been working in Western Pennsylvania real estate for years, helping buyers across Allegheny, Washington, Beaver, and Butler counties navigate through the closing process without last-minute panic. And the conversation I dread most is when a buyer calls me the week before closing and says nobody told them about these extra costs. This is too late to plan. I have heard this conversation with buyers right before closing, and it usually comes down to one thing. They just were not given the full picture early enough. When we plan for it from the beginning, everything feels a lot more manageable. So let's talk about that now. Pennsylvania is one of the most expensive states in the country for closing costs. The main reason is how transfer taxes are structured here. As a Pittsburgh buyer, you should budget between 5 to 7% of your purchase price just for closing costs. So on a $240,000 home, that's about $12,000 to $16,000 on top of your down payment. Out-of-state buyers especially get blindsided by this because the national average they find online is way lower, and it does not apply here. I work with a lot of relocation clients, and this is often the biggest difference that they notice right away. What they see online nationally does not always match how things work here in Pittsburgh, so having local guidance really matters. So what exactly makes up those closing costs? Let me break it down. First, there's lender fees. This includes the loan origination fee, which basically what the bank charges you to process the mortgage. Most lenders charge between 0.5% and 1% of your loan amount for this. On a $220,000 loan, that is $1,000 to $2,000 right there. Add an appraisal fee of $400 to $600, and you're already looking at a real number before you have paid anything else. Second is title insurance. This protects you if someone ever challenges your right to own the home. In Pennsylvania, you usually pay for both a lender's policy and an owner's policy. Together, these can run $1,000 to $2,000 depending on your purchase price and the title company. Third, and this is the big one, is the Pennsylvania transfer tax. And here's how it works. The state takes 1% of your purchase price. Then the local municipality layers on top of that. So in the city of Pittsburgh, the total is 5%. It breaks down as 1% going to the state and 4% going to the city and the school district. And here's the part that most buyers don't hear until it's too late. The custom in Pittsburgh is for the seller to cover half of that. So that means that you as the buyer are typically responsible for 2.5% if it's a home in the city of Pittsburgh. On a $240,000 home, that could be $9,600 in transfer tax alone, just on your side. That's not a typo. It's one of the highest buyer side transfer taxes in the entire country, and it's the number one reason that out-of-state buyers get shocked at the closing table. This is one of the most important numbers to understand in Pittsburgh. Once buyers see how this is structured, everything else about closing costs start to make a lot more sense. In the suburbs, like communities across Allegheny, Washington, Beaver, and Butler counties, the total transfer tax usually drops to about 2 or 2.5%. Traditionally, that was split evenly, 1% each, but in today's competitive market, a lot of sellers are pushing the buyers to cover more of that portion themselves. Treat it as negotiable, but don't assume that it's going to be shared. The last piece at the closing is prepaid costs and escrow deposits. This includes prepaid homeowners insurance, property taxes going into your escrow account, and mortgage interest for the days between closing and your first full payment. These are not fees exactly, but they're real cash out of pocket, so plan for another $2,000 to $4,000 here, depending on when you close during the year. Add it all up, and a buyer purchasing a $240,000 suburban Pittsburgh home should realistically have $15,000 or more available beyond their down payment. In the city, it's more. The buyers who know this going in have smooth closings. The one who find out the week before do not. So now you know what closing day looks like, but the costs don't stop there. What comes next is the one that catches the most out-of-state buyers completely off guard, and honestly, it's the one that can affect your monthly budget for years. Property taxes in Western Pennsylvania differ from those in most of the country. And if you're moving here from out of state, this is one of the most important things that you can learn before you buy. I always walk my buyers through this ahead of time so that they can make decisions based on realistic numbers, not just what they see on the current tax bill. That way that there are no surprises later on. Here's how it works. In Pennsylvania, your property taxes come from three places: the county, the municipality, and the school district. The school district piece is usually the biggest chunk, often 60 to 70% of your total annual tax bill. So the school district your house sits in affects your tax bill whether you have children or not. What makes Allegheny County extra complicated is the assessment system. The county uses a base year, and right now it's 2012. So basically your home is officially assessed at what it was worth over 10 years ago, not what it's worth today. At first, that might sound like a good thing, but here's where it gets tricky. Once you buy a home, your sale price becomes public record. School districts in Allegheny County keep an eye on home sales, and if your purchase price is a lot higher than the old assessed value, the school district can file an appeal using your sale price as evidence that the assessment is too low. If they win, your property tax goes up significantly in year 2. Pittsburgh buyers call this the newcomer's tax, and it happens all the time. You could be paying way more than the previous owner ever did, and you would have no idea that it's coming. And it's not just Allegheny County, it's also Washington, Beaver, and Butler counties as well. So around here, you'll hear people casually refer to this as the newcomer's tax. It's not official, but it's something that local buyers and agents are very aware of because how often it comes up. This means you cannot just look at the current owner's tax bill and assume that yours will be the same. That old advice is genuinely risky here. The safe way to estimate your future tax in Western Pennsylvania is to use a 1.5% to 2% of your purchase price as your annual property tax estimate. So on a $240,000 home, that's about $3,600 to $4,800 per year. It's not perfect for every address, but it gives you a realistic number that accounts for what might happen after your purchase gets recorded. Your agent and a local settlement company can really dig into the specifics for any address that you're serious about. Property taxes are the highest ongoing cost after your mortgage, but there's another whole category that surprises buyers, especially those coming from newer construction markets or warmer states. Pittsburgh's homes are old, and old homes come with specific set of costs and requirements that you just need to know about. Here's the thing about Pittsburgh homes. They're beautiful. Original hardwood floors, plaster walls, and real craftsmanship that you just don't find in newer builds. Lawrenceville, Bloomfield, Squirrel Hill, neighborhoods all over Western Pennsylvania have homes like this. A large portion of Allegheny County's housing stock was built before 1960. Some of it goes back to the early 1900s. Some of the most beautiful homes that I have helped clients purchase also come with the most character. And part of that is understanding how to properly evaluate and plan for older systems. That history is part of what makes Pittsburgh special, but it also means older systems, and older systems eventually cost money. Here's what to watch for. Older electrical systems, especially knob and tube wiring or outdated panel systems that have never been updated. They can be both a safety problem and an expensive fix to bring up to code. Old plumbing, like lead pipes or cast iron drain lines that are way past their useful life, can be a costly surprise if nobody checks before closing. Old roofs, old furnaces, foundations that have endured decades of Pittsburgh's winters with their freeze and thaw cycles. These are all things that a good inspector will find and flag. According to annual home spending data, homeowners spend an average of over $9,500 a year on maintenance and repairs, and older homes run higher than that. In Pittsburgh, it's smart to budget 1.5% to 2% of your purchase price per year for upkeep, especially in the first year when you're still figuring out what your home needs. Get a home inspection. Quality one in Pittsburgh runs $350 to $500 and covers the roof, foundation, electrical, plumbing, HVAC, and structure. If the home is older or appears to have deferred maintenance, add a sewer scope. That's an extra $100 to $200, and it sends a small camera through the sewer line to check its condition. Sewer line problems in Pittsburgh can cost $5,000 to $15,000 or more to fix. Catching that before you close is worth every penny. I always encourage buyers to look at inspections as an investment, not an expense. It's one of the best ways to fully understand what you're buying before you commit. Here's one of those things that almost nobody outside of Pittsburgh knows about until their agent actually tells them. Most municipalities in Allegheny County require something called a dye test before a home can be sold. A professional flushes dye through the drains and downspouts to make sure that rainwater is not going into the sanitary sewer system. It's an environmental compliance thing, and it costs $100 to $300. It's in a normal sale. If there's a problem, the seller fixes it. But in an as-is sale or an estate sale, which are both really common in Pittsburgh because of all of the older homes, that fix can land on you. And if you are buying an as-is or an estate property, ask your agent specifically how dye test remediation is handled in your contract before you sign. And your agent should schedule the test early in the process to avoid a last-minute delay at closing. This is where having a full monthly breakdown really matters, because it gives buyers a clear picture of what homeownership actually looks like day to day. The bottom line is this: every one of these things is findable before you commit. A thorough inspection, a sewer scope, and an understanding of the dye test process give you the full picture. The buyers who skip steps to save a few $100s are the ones who end up with a 5-figure surprise in their first year of ownership. Let's take a breath. I know that we have covered a lot of ground, and some of it is very heavy information when you're excited about buying a home. But here's what I want you to take away from everything so far. None of these costs should catch you off guard. Every single one of them is plannable if you know about it in advance. And now you do. If you're still with me, you are already ahead of most buyers just by understanding how all of this works before you even make an offer. If you're looking at moving to the Pittsburgh area and want all the real numbers in one place, I put together a completely free Pittsburgh relocation guide. It covers neighborhoods, top employers, school districts, and cost of living breakdowns in plain language. You can download it in the description and the top pinned comment. And for anyone who is new here, I'm Diane McConaghy. I'm a Pittsburgh-based realtor and relocation specialist, and my team works with buyers and sellers every day throughout Allegheny, Washington, Beaver, and Butler counties. Our whole job is to make sure that you go into this process with clear eyes and a real plan. All right, we've got 2 more big cost areas to cover. These are the ones that live in your monthly budget after closing, and they're the ones that most buyers never see on a listing flyer. Your mortgage payment is one number. Your actual monthly cost of owning a home is a different, higher number. The gap between those two is where many buyers get into financial trouble, and it usually comes down to 2 things: mortgage insurance and HOA fees. Let me start with mortgage insurance, because there are actually 2 different kinds and they work very differently. Most people don't know this until it matters. If you're using a conventional loan and putting down less than 20%, your lender will require private mortgage insurance, or PMI. PMI usually runs between 0.5% and 1.5% of your loan amount per year, split into monthly payments. On a $220,000 loan, that's anywhere from $92 to $275 added to your monthly payment. The good news is that PMI is not forever. Under the Homeowners Protection Act, once your loan balance drops to 80% of what you originally paid for the home, you can officially ask for it to be canceled. A lot of buyers hit that milestone and just keep paying because nobody told them that they could ask for it to be stopped. Don't let that be you. Track it and request the cancellation. I always remind my clients to keep an eye on this over time, because there's a real opportunity to reduce your monthly payment once you reach that equity position. Now, here's where it gets important for first-time buyers. If you are using an FHA loan, which many first-time buyers in Western Pennsylvania use because the down payment requirement is lower, the mortgage insurance works very differently. FHA calls it Mortgage Insurance Premium, or MIP. And with most FHA loans originated today, that MIP does not go away when you hit 20% equity. It stays for the entire life of the loan. The only way to get rid of it is to refinance it into a conventional loan once you have enough equity to qualify. If you are comparing an FHA loan versus a conventional loan right now, ask your lender to model out the total cost of that MIP over time. The long-term difference can be significant, and it's worth knowing before you pick your loan type. This is why it's so important to compare loan options side by side and look at both the short-term and the long-term impact before making a decision. I can provide you with the name of a local lender who has helped many of our buyers. She works to find the right loan product that meets their needs. Now, let's talk about HOA fees. Not every home in Western Pennsylvania has a homeowner association, but if you're looking at a newer development, a planned community, a condo, or a townhome in Allegheny, Washington, Beaver, or Butler counties, there's a good chance that one comes with the property. According to Zillow research, average HOA fees nationally run $200 to $300 per month. In some Pittsburgh area premium communities, they go even higher. In simpler planned developments, they might be as low as $50 to $100. I always provide my buyers with the HOA documents so that they understand exactly what they're getting, what's covered, and how financially stable that association is. I did a video on this a few years ago. I don't send the HOA docs for kicks and giggles. It's important that you read and understand the rules, the regulations, and most importantly, the restrictions. The monthly fee is only part of the story though. What really matters is what the HOA covers and what their financial reserves look like. A healthy HOA with monthly reserve indicates that shared spaces and structures are being properly maintained. An underfunded, behind on maintenance HOA is a red flag because when something big needs to be fixed, they charge every homeowner a special assessment to cover it. Before you close on any home with an HOA, ask your agent to get the financial statements and meeting minutes. It takes a few minutes and it can save you from a big surprise down the road. One more monthly cost to factor in: homeowners insurance. Rates have risen noticeably since 2023 due to inflation in labor and material costs. For a standard Pittsburgh area single-family home in 2026, plan for $1,200 to $2,200 per year, depending on the home's age, size, and location. If the home is in a flood zone, flood insurance is a completely separate policy and can add hundreds to thousands of dollars per year on top of that. This is another area where planning ahead makes a big difference, especially as costs have adjusted over the past few years. Many people aren't aware that they can actually get a better rate if they plan ahead and secure the homeowner's insurance early in the process, weeks prior to closing. We've covered closing costs, property taxes, the realities of older Pittsburgh homes, and the monthly charges that are included in your housing payment. There's one more category, and it is the one that most buyers generally do not think about until they are in it. There is a stretch of time between the day you close and the day your new house actually feels like your home. And for most buyers, that stretch comes with a steady flow of expenses that were never in the budget. I call these setup costs, and they add up faster than people expect. This is the part of the process where buyers really start making the home their own, and it's helpful to go in knowing these costs are part of that transition. Think about what you actually need when you move into someone else's old house. Window covers alone can be a real surprise. A standard 3-bedroom home might need $500 to $2,000 just in blinds and curtains. Appliances are another gap if the home did not come with a washer, dryer, or refrigerator, which happens all the time in Pittsburgh sales, where those items are negotiated separately. Replacing just those 3 things at entry-level prices is $1,500 to $3,000. If your new home has a yard, you now own that responsibility. A basic mower, leaf blower, and some hand tools is another $300 to $800 before you have done your first weekend of yard work. If you're moving in before winter, which you should take seriously in Pittsburgh, a snow blower runs $700. A seasonal plowing contract is $200 to $500 depending on your driveway size. These are not optional if you have a steep driveway and don't want to be stuck. Right after closing, there's also a few things that every smart homeowner does immediately. Re-key the locks before your first night there. That costs $100 to $250, and it's just common sense since you don't know who has copies of the old keys. Replace your HVAC filters. Get the furnace and water heater serviced before winter hits. Install carbon monoxide and smoke detectors if they're not already there. All of that together is another $200 to $400 in that first month, but it protects your family and your investment. According to Zillow research, first-time buyers consistently underestimate their first-year costs by 30 to 40% compared to what they actually spend. The buyers who come out of that first year feeling good are the ones who set aside a separate move-in fund before closing. Not your down payment fund, not your closing cost fund, a third bucket just for setup and first-year expenses. Even $3,000 to $5,000 set aside specifically for this makes everything after closing feel manageable instead of stressful. The point of this whole video is not to talk you out of buying. It's to make sure that you walk into this fully prepared prepared so that your first year feels like the win that it's meant to be. The buyers who feel the most comfortable after closing are the ones who planned for all of these things ahead of time and gave themselves that extra cushion. All right, let me bring it all together. Buying a home in Pittsburgh in 2026 is still one of the smartest financial moves that you can make, but the purchase price is just the beginning of the real number. Closing costs in Pennsylvania run 5 to 7% of the purchase price because of how transfer taxes work here. In the city of Pittsburgh specifically, buyers typically carry 2.5% of the 5% transfer tax on their side. Property taxes require careful planning because the newcomer's tax trap is real in Allegheny County, and the safe way to estimate it is 1.5 to 2% of your purchase price annually. Pittsburgh's older housing stock means real inspection costs, and the mandatory dye test in most Allegheny County municipalities is something almost nobody outside of Pittsburgh knows about until they are already in the process. If you're using a conventional loan, your PMI can be canceled once you reach 20% equity. If you're using FHA, the MIP stays for the life of the loan unless you refinance. Homeowners insurance now runs $1,200 to $2,200 a year, and your first year setup costs deserve their own special separate fund before you ever make an offer. Every one of these things is manageable when you know about it ahead of time. The buyers who feel great about their purchase a year later are the ones who understand the full picture going in, not just the listing price. After helping hundreds of buyers through this process, I can tell you the ones who feel the best long-term are the ones who understood the full picture going in, not just the purchase price. If there's one thing I want you to take away, it's this. When you understand the full process up front, there's no surprises, just smart decisions. And that's exactly how I guide my clients every step of the way. If this helped you feel more ready and more confident about buying a house in Pittsburgh and what it actually costs, give it a thumbs up and subscribe. This is the kind of honest, practical real estate content that we put out every week, and it's exactly what this channel is here for. When you are ready to make your move, I want to be in your corner. My contact information is right below this video. Whether you are buying your first home, moving up, or relocating to Western Pennsylvania from elsewhere, my team and I work with buyers and sellers every single day across Allegheny, Washington, Beaver, and Butler counties. We'll make sure that you go into this process fully informed and fully ready. Grab the free Pittsburgh Relocation Guide in the description too. It has real numbers, the neighborhood breakdowns, and the things that most buyers say they wish they had known before they started searching. And when you're ready for more, watch my next video, Pros and Cons of Living in Pittsburgh, Pennsylvania in 2026. That's the update. I'll walk you through what day-to-day life in this city actually looks like, the good and the honest, so that you can decide for yourself whether Pittsburgh is the right place for you in your next chapter. I'm Diane McConaghy, your Pittsburgh Realtor and Relocation Guide, and I'll see you in the next one.